I mean, no disrespect by this, but would you and other economists necessarily know the full extent of the impact now that the US government shutdown is affecting the release of key economic data?
Yeah, we are certainly flying blind in a sense right now. It's always a tricky situation to forecast it. But yeah, we have not gotten a lot of economic data the last couple weeks as the government has been shut down. Fortunately, we will get the September CPI release that was initially intended for Wednesday this week. That will now be released next Friday. So we are getting some information, but yeah, there are a lot of conflicting signals for the U.S. economy right now, and not the best time to be getting no data.
What is your take on whether China-US trade tensions are ratcheting up once more?
Yeah, we've certainly experienced that last week when we got the threat of a potential 100% tariff on China starting November 1st. We did see that walked back a bit over the weekend. I think there is this sense in which no one really wants to escalate tensions further, but it is an important reminder that the tariff issue is definitely still with us, and this can change frequently.
Wall Street moved higher on Monday after Donald Trump softened his tone. Are traders now, and perhaps still, pricing in the view that Trump is full of bluster?
Yeah, I think there is this sense in which, the worst case scenario for tariffs at least has been avoided. We saw that, of course, back when all the announcements were starting in April, those large tariffs were delayed and walked back. But I think it is important to remember that the tariff rate itself has gone up over this period. We might not be getting the worst case scenario, but we are still ending up with effective tariff rates that are the highest that we've seen in about 100 years. And I think it is just too soon to draw conclusions that that is going to be a pretty benign scenario.
But the impact from tariffs on US goods inflation does appear more muted than perhaps many had expected so far. Is that how you're seeing it? And if so, Are you surprised it hasn't shown up more strongly?
Yeah, no, I think that is absolutely the case. Obviously, forecasting this in any specific month, the magnitude of it is going to be pretty tricky. We don't really have historical comparisons to look to. But I think it is fair that the tariff pass-through so far has been less than forecasters were expecting 6 months ago. I do think, unfortunately, that might be a consequence of consumers are just not strong enough to handle these large price increases. So it will just be much more drawn out and spread out over time.
Now, I mean, no disrespect by this, but would you and other economists necessarily know the full extent of the impact now that the US government shutdown is affecting the release of key economic data?
Yeah, we are certainly flying blind in a sense right now. It's always a tricky situation to forecast it. But yeah, we have not gotten a lot of economic data the last couple weeks as the government has been shut down. Fortunately, we will get the September CPI release that was initially intended for Wednesday this week. That will now be released next Friday. So we are getting some information, but yeah, there are a lot of conflicting signals for the U.S. economy right now, and not the best time to be getting no data.
And how is the shutdown, which looks like it's going to enter into its third week, hitting the economy now?
Yeah, the longer the shutdown itself lasts, the more of an economic drag it could be. In the first couple weeks, it was not the case yet that government workers had missed a paycheck. That changes this week. So yes, government workers are starting to miss paychecks, and the longer it lasts, that is a drag on growth. If we're looking at something like a month-long shutdown, that could maybe be around 0.8 of a drag on Q4 growth.
Are you concerned that with all the instability, the risks to the US financial system are growing?
Yeah, I think we have seen some more building risks. Certainly the tariff announcements that we had late last week, that was a risk for markets. We have seen, some idiosyncratic pockets of credit markets that seem to be a bit less stable. So there certainly are those risks out there. I think there is maybe this optimism around the AI investment story, and that might be true for financial markets. But yeah, for the economy more broadly, there certainly are these risks growing.
And so what does it mean for the Federal Reserve itself under increasing political pressure? Do you think it'll be looking to adjust interest rates lower more quickly?
Yeah, that is our base case at Citi. I think it is probably a Fed that becomes increasingly concerned on the labor market risks that we're seeing. And yeah, if anything, we've seen less in terms of the inflation pass through from tariffs. This could be a Fed that is at least cutting rates back to where they think a neutral policy rate is more quickly than the market currently is pricing.
Veronica Clark, thank you.
Thank you.